Welcome back, everyone. Seriously, if you've glanced at the news lately, you probably saw gold and silver absolutely popping off on the charts. People are texting me like, "What's going on? Why are metals suddenly the hottest thing in the market?"
It's wild, right? Gold just smashed through its all-time highs, and honestly, silver made an even bigger splash. But these moves aren't just random spikes, they're tied to some big shifts, like changes in interest rates, a lot of global uncertainty, and frankly, demand that just keeps building.
I keep hearing about interest rates being the main trigger. But why would lower rates suddenly make gold so much more attractive than, say, just holding cash or bonds?
That's a great question. When folks think rates are heading down, gold really shines because it doesn't pay interest itself, so if cash pays less, gold's disadvantage disappears. And when inflation or global tensions start bubbling up, gold gets even more appealing as a kind of safe zone for your money.
So, in a weird way, fear is like rocket fuel for gold prices. If everybody's nervous about the economy or the dollar, gold just soaks up all that anxious money.
Totally. Whenever you see headlines about shaky economies, wars, or inflation flaring up, investors almost instinctively flock to gold. It's like the financial version of grabbing an umbrella when clouds roll in.
I've noticed a lot of people who never cared about gold before suddenly asking about it. They want to hedge against whatever crazy thing might happen next.
Yeah, and it's not just regular folks. Even big institutions pile in when things look rough. But let's not forget about silver. Its price swings have been even wilder lately, and for a whole bunch of different reasons.
Silver's kind of the wild card here. I mean, gold's reputation is all about stability, but silver seems to party twice as hard, up or down. What actually drives that?
I love that you called it a wild card. It really is. Silver's not only a precious metal, but it's also super important for technology, like solar panels and electric vehicles. With all this green tech ramping up, demand is exploding, while new supply isn't keeping pace.
So it's pulling in money not just from people who want safety, but also from industries that actually need the metal to build stuff?
Exactly. And that's why silver can swing even harder than gold. When the industrial side booms, silver can outpace gold by a mile, but when things cool off, it drops fast too. It's like riding a roller coaster instead of a merry-go-round.
Now I'm thinking, should we expect these wild moves to keep going? Or is the roller coaster about to hit a dip?
It really depends on what happens with interest rates and global stress. If rates start dropping and worries stick around, gold could keep shining. Silver might even outpace it, just with much sharper ups and downs.
But if inflation fades quicker than people expect, or rates stay stubbornly high, does that mean both metals could take a hit?
You nailed it. In that case, we'd probably see a pullback, especially for silver, which tends to fall harder and faster when the mood shifts.
I bet everyone listening is wondering, should I buy gold or silver now? Or is it too late to the party?
For long-term folks, having a slice of your portfolio in gold can make sense as a safety net. But buying a huge chunk all at once, especially after a big run-up, is risky. If you're thinking of adding, spacing out those purchases might be a smarter way to go.
That sounds much less stressful than dumping in all your cash at record prices. What about for the adrenaline junkies, the short-term traders?
They'll need nerves of steel. Silver in particular is all over the place, so risk management is everything. If you can't stomach big drops, it's easy to get shaken out.
So, final takeaway. Gold's kind of the steady hand. Silver's the high flyer, with equal parts opportunity and risk. It really comes down to knowing your goals and not getting swept up in the hype.
That's the bottom line. Pay attention to the trends, keep your risk in check, and remember, chasing prices blindly is the fastest way to regret. There's always another opportunity around the corner.